What if the next explosive penny stock isn't random hype, but a deeply researched biotech backed by some of the smartest billionaire investors in the world? Every single week, we see a small cap stock suddenly go parabolic. It trends on social media, traders rush in, and the same question gets repeated everywhere. How did I miss this move? But what if the next breakout isn't luck? What if it's a beaten down biotech trading around the price of a fast food meal, supported by serious capital, Wall Street coverage, and major clinical catalysts right around the corner? Today, we're diving deep into a small cap biotech that's quietly positioning itself in one of the largest and fastest growing healthcare markets in the world. Mental health treatment. And this is not financial advice. Just pure research and analysis to help you understand the opportunity and the risks. The company we are looking at is ATAI Life Sciences. This is a clinical stage biotechnology company focused on developing innovative treatments for mental health disorders, particularly conditions like treatment-resistant depression and social anxiety disorder. Unlike traditional pharmaceutical companies that rely on incremental improvements, ATAI is working on next-generation therapies designed to act rapidly, deliver durable results, and potentially reset dysfunctional brain activity. Their mission is clear: transform mental health care at scale. Mental health is not a niche market. Depression affects hundreds of millions of people globally and remains one of the leading causes of disability worldwide. In the United States alone, the economic burden tied to major depressive disorder reaches into the hundreds of billions of dollars annually. And despite decades of available antidepressants, a large percentage of patients still do not respond adequately to existing treatments. That gap between need and effective treatment is where ATAI is positioning itself. At the center of ATAI's pipeline is its lead program, BPL-003. This candidate is being developed as a potential treatment for individuals living with treatment-resistant depression. What makes BPL-003 different is its use of a controlled psychedelic compound administered in a clinically supervised setting. The goal is to disrupt entrenched negative thought patterns and help reset brain networks that conventional antidepressants often fail to meaningfully impact. Importantly, BPL-003 has received Breakthrough Therapy Designation from the U.S. Food and Drug Administration, a status granted to therapies that show substantial improvement over existing treatments during early clinical development. That designation can accelerate the development and review process if future data continues to be positive. Beyond its lead program, ATAI is also developing VLS-01, another candidate aimed at treatment-resistant depression, and EMP-01, which is being studied as a potential therapy for social anxiety disorder. Both of these target markets are large, underserved, and growing. Social anxiety disorder alone affects millions of people, many of whom struggle with inadequate treatment options. If even one of these therapies successfully navigates late-stage trials and regulatory approval, the commercial opportunity could be significant. Now, let's talk about something that always grabs investor attention. Who is backing this company? ATAI has attracted funding from some of the most high-profile names in venture capital and technology investing. One of them is Peter Thiel, widely known as a co-founder of PayPal and an early investor in Facebook. Thiel has also been associated with early involvement in companies like SpaceX and Palantir Technologies. When investors with that kind of track record deploy capital into a biotech focused on psychedelic-based mental health treatments, it naturally raises eyebrows. He's not alone. ATAI has also been backed by notable investors including Steve Jurvetson. The presence of experienced venture capitalists doesn't guarantee success, but it does suggest that serious due diligence was performed before large checks were written. Wall Street analysts are also paying attention. Multiple analysts currently cover the stock, and consensus price targets suggest significant upside compared to recent trading levels. One firm, H.C. Wainwright, recently reiterated a buy rating with a notably higher price target. Analyst targets are not promises, but they do reflect professional models built around projected milestones, probability-adjusted revenues, and pipeline valuation. Speaking of milestones, catalysts are everything in biotech investing. Clinical data releases, regulatory feedback, conference presentations, and trial initiations can dramatically impact stock prices. ATAI's lead candidate is moving through important development stages, including regulatory feedback discussions and preparation for late-stage trials. Additionally, other programs in the pipeline are expected to generate further clinical data updates. Recently, the company announced positive top-line results from a phase 2 study of EMP-01 in social anxiety disorder. The trial met its primary objective on safety and tolerability and demonstrated meaningful improvements on established clinical scales used to measure social anxiety symptoms. While more detailed data will be presented at upcoming scientific venues, early signals appear encouraging. On top of that, the company has scheduled multiple investor-facing events and healthcare conferences within a short time frame. For small-cap biotech stocks, visibility matters. When management presents at major conferences, it provides opportunities to update institutions, attract new coverage, and potentially increase investor awareness. Another point investors often examine is insider conviction. ATAI's founder and CEO, Christian Engermeyer, has invested substantial personal capital into the company since its inception and has publicly stated his long-term commitment, including voluntary lock-up agreements. Insider ownership does not eliminate risk, but meaningful skin in the game can align leadership incentives with shareholders. Financial strength is another crucial piece of the puzzle. Biotech companies burn cash during research and clinical development, so balance sheet health determines how long they can operate before raising more funds. ATAI has reported a strong cash position relative to its liabilities and has raised additional capital during stronger share price periods. According to its latest filings, the company holds substantial total assets compared to total liabilities, resulting in a healthy asset-to-liability ratio. Management has indicated that its existing cash runway is expected to support operations for multiple years. That reduces near-term dilution concerns compared to companies constantly scrambling for financing. Of course, none of this eliminates the inherent risks. Clinical-stage biotech investing is speculative by nature. Trials can fail. Regulatory hurdles can delay timelines. Even promising early data does not guarantee Phase 3 success or FDA approval. Competition in the mental health and psychedelic therapy space is also intensifying as more companies enter the field. So where does that leave us? On one hand, you have a small-cap biotech operating in a massive high-need market with breakthrough designation, multiple pipeline shots on goal, strong investor backing, analyst coverage, upcoming catalysts, and a solid balance sheet. On the other hand, you have all the uncertainty that comes with drug development and regulatory risk. The big question becomes this: are high-profile investors and Wall Street analysts correctly identifying a future leader in next-generation mental health treatment? Or is this simply another speculative biotech story that won't make it through the finish line? That's something every investor has to decide for themselves after reviewing the data, understanding the risks, and evaluating their own risk tolerance. If you found this deep dive into ATAI Life Sciences helpful and you enjoy detailed small-cap stock analysis, make sure you like the video so the algorithm pushes more hidden biotech opportunities your way. Subscribe for more research-driven breakdowns on emerging growth stocks, penny stocks with major catalysts, and under-the-radar companies that Wall Street is quietly watching. Let me know in the comments what you think about ATAI and the future of psychedelic-based mental health treatments. And as always, do your own research, manage your risk wisely, and I'll see you in the next video. So here's the bottom line. Opportunities like this don't come around every day. A small-cap biotech operating in a multi-billion-dollar mental health market. A pipeline targeting treatment-resistant depression and social anxiety. Breakthrough Therapy Designation from the FDA. Billionaire investors like Peter Thiel backing the vision. Multiple clinical catalysts lined up. And a balance sheet strong enough to fund operations for years. But remember, biotech is never a straight line up. It's volatile, it's data-driven, it's high risk, and high reward. One clinical update can change everything. That's why this isn't about hype. It's about staying informed before the crowd catches on. The biggest gains in the market often happen when uncertainty is still high and conviction is still low. If ATAI Life Sciences executes on its pipeline and delivers strong late-stage data, today's price could look very different in the future. If it doesn't, the downside is real. That's the nature of early-stage biotech investing. The question is simple. Are you willing to do the research before the breakout? Or watch from the sidelines and ask later how you missed it? If you value deep-dive stock analysis on small-cap growth companies, smash the like button so YouTube knows to show you more hidden opportunities like this. Subscribe so you don't miss the next high-potential biotech breakdown. And drop a comment below. Is this the next breakout stock, or is the risk too high for you? Do your own due diligence. Manage your risk, stay disciplined, and I'll see you in the next video.